Coming to entry number 52, interest on capital paid at the rate 10%, capital being rupees 1 lakh. My first question to you is, why do you need to pay interest on capital? See, the proprietor, that is the owner of the business, brings some capital into your business so that the business can function. Had he put his capital somewhere else, he would have generated money from there. Had he put it in a bank account, he would have earned interest from there. So, the opportunity that the 1 lakh is coming to your business need to pay some interest to the owner of the business, that is at the rate 10% here for example, and that is an expense for your business. You are paying interest on capital to the owner of the business. Also keep into mind that there is a principle called as accounting entity and business entity principle. That also says that there is a business and a person, proprietor, owner of the business. The business and proprietor are never the same. They are two separate entities. So here what is happening? The proprietor is putting his money into the business, and so he is charging interest from the business, which is an expense for the business. So interest on capital, now it is clear that it is an expense for me, and expense when increases has to be debited. We all know, see, all expenses, whether it is rent, whether it is salary, printing and stationery, we debit them. Same way, interest on capital have to be paid, no matter it has to be paid only to the owner or the proprietor of the business, but as they are two separate entities, we have to pay him. So the entry is interest on capital account debit, interest on capital account debit. How much? 10,000, 10% of 1 lakh. Interest on capital account debit to, what should I credit now? Is he taking it in cash? No. That interest adds up to his capital, and when my capital increases, then what do? I have to credit it. See, when the capital increases, I have to credit it. So interest on capital account debit to capital. My capital account has also increased by 10,000 because the interest what I had paid to the proprietor has been added to the capital which is put into the business. Now the next entry, interest on drawing charged rupees 2,000. Drawing, when the proprietor withdraws money from the business, it is drawing. Drawing account is treated as expense, or it has to be always debited. See, what entry will I pass here? Drawing account debit. By 2,000. Now what is interest on drawing? What is interest on drawing? The proprietor withdrew money. So the business is now charging interest to the proprietor. Business is charging interest to the proprietor. So it is income for the business. When it is income or gain, what is the rule? When it is income for the business, it has to be credited. So drawing account debit to interest on drawing. Interest on drawing is an income for the business, so it has to be credited because whenever a revenue or an income is generated or increased, it has always to be credited.